Yo, 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 gang, gang, gang. What up, what up, what up?
What up? What up?
Gang. It's everybody's favorite day. It's Monday. It's
It's the
time.
Monday call.
It's time to play the game, y'all.
Come on. We lie to play, but we don't play.
We gonna spit that fire game, y'all. Fire, fire, fire.
I'm on fire.
Fire, fire, fire. Yo, what is life if you're not having fun?
Now you know what? This dip is fun for me.
Yo,
Buy the dip. Not financial advice.
is absolutely whammy. Yo, this is why I can't wait to even like start this. What I've done today is just pure dip education. That's what it is. Pure dip education. Hang on a minute. I'm just posting something on the Facebook group that I want to touch on. That I just want to talk about real quick.
Actually, had them in the bathroom. Okay.
All right, cool. That's 5 minutes. We're giving everybody enough time. So we're gonna get started. Let me try and put this on YouTube, on Facebook. The book of the face.
What more?
The book of the face.
All right. Because you're near the thing.
What do you need the what? Near what?
I've gotten fresh trim.
Me? Did I get fresh trim?
Fresh.
Nah,
Fresh.
man, clock that I've got the dreads redone, you know. Yo, shout out to my barber, wifey. Yeah, that's when you know you kind of locked in, then, isn't it? When your wifey's doing your dreads like this, and people are going, "Yo, your dreads look fresh," you know. Then you kind of locked in, innit? Meeting title.
Oh, that's nice.
For this meeting title, about that dip. Okay, cool. Baranga.
Let me mute myself.
Let's get into this. Hey. Anyone that's late, Ninja, I'm gonna make you co-host and you just make co-host. Boom. All right, cool. So I've tried to make these slides as funny as possible, or like I've tried to make it slightly lighter humor than usual. So let's get cracking. Let me
Hi,
you can see my screen.
Elijah. Have you brushed your teeth? Huh?
We are live on Facebook. We are
Brush your
live.
teeth, please.
Let me just mute everybody.
Can you turn that down, please? Learn some stuff here. I need due diligence. I might pay attention as well, you know.
On Ninja, it's not letting me mute everyone, and it's not letting me add everyone for the first time ever. That's weird. Normally it lets me do that.
Oh, okay. I mean, I'm admitting people in now.
Okay, let me just mute everyone. If you can mute everyone while I'm gonna get cracking.
Do you? Everyone's muted.
Oh, there it is. I found it. Mute all. There we go.
For sure.
Then people can unmute themselves for questions when we get there. Okay, can everyone see my screen? Someone shout out in the chat. Ninja, can you see my screen?
Not yet. It says started sharing, but
It's loading.
yeah, see it now.
Yes, we can see it now.
Okay, boom. So welcome to the game. Anybody that's new, thank you for attending. Anybody that's a regular, thank you for attending. Share the love, spread the knowledge. So what we're here to do is to just educate and elevate. We are not financial advisors. We do not intend or to be perceived or want to be received as financial advisors. Anything you may see or hear on our show, please do your own research. All investment comes with risk. If you're unable to mitigate the risk, please seek financial advice from a professional accredited financial advisor. If you want to talk to a professional accredited advisor, we actually are in partnership with one. So just let us know and we can point you in the right direction. Once again, please do your own research. Do not use any information that you may hear or see on this show as investment advice. So let's get cracking. That's the disclaimer done. So obviously every single week we start off with just a little bit of mindset, just a little bit of, just life skills and just like understanding money and how money works and the kind of mindset that we need to develop. Now, I'm no multi-billionaire. I'm no multi-millionaire. However, I'm very lucky that in my network, I have a network of multi-millionaires and of multi-billionaires. And it's crazy to know that this stat, 88% of millionaires are actually self-made. Now, how does this happen? This happens because they understand the game. Now, what they don't become is a Henry. Now, a Henry is someone that has a high income, is not really rich yet. Now, there's loads of people that we see on Instagram, on social media, our favorite footballers, our favorite YouTubers, so on and so forth. They may be very, very rich, but they are not wealthy. Now, they are living what is known as, and this is information that I was given from one of my billionaire mentors. And then I saw a YouTuber saying the same thing. So I thought, you know what, I'm going to reiterate this because it's very important during these times. People are living a net zero life. What does that mean? Because it means people have £100 come in their bank and they think to themselves, oh, I can buy this. I've got £100. But then they don't have any assets. So that means that is literally all they have. If you have assets that you are willing to sell, then that £100, feel by all means to spend it. But otherwise, you're living a completely net zero life. Number two is money traps. And that money trap is the trap of looking for get rich quick schemes. If you're constantly looking for ways to get rich quickly, you will find that you're not actually going anywhere. Also, another way to make sure that you don't get to where you want is to just quite simply always be purchasing liabilities. That's things that you pay for monthly and just not educating yourself. And then number three is you need to have assets so that your money grows faster than it just sitting in the bank. Number four is to just cut out the fake flexing. Nobody cares. Honestly, like no one cares. Like my life since I stopped fake flexing has become so much better. It's so much less stress just being like just not even trying to impress anyone with where I'm at financially. Like I just don't care. It's just so much more easier, guys. Like trust me, you having the Gucci belt doesn't impress anyone. Do you know why? Because everyone's seen 1,001 Gucci belts. Having the lubes doesn't impress anyone. Do you know why? Because they're all over Instagram. Nobody cares. People are after rare and unique items. The most rare and unique item is you. So impress people with you and the value that you can bring to them instead of having external value, but not having any internal value. That's the trap. Now, fake flexing can be anything from cars, watches, whatever it is. Having things that you own as an item that are depreciating that are more than all of your assets. So getting that Merc to impress people. Been there, done that. Did I have any assets? No, but I had a Merc. Doesn't make any sense. Having a Merc, but not having a drive to park it on and to park it on the road doesn't make any sense.
So basically, Mr. Harding, you had a liability.
I had a fat liability, bro. I was paying 350 quid a month plus in insurance. Crazy, stupid. Worst thing I've ever done in my life, that was. Next is the game. Learn the game. Learn how the game works. Learn how educate yourself on financial literacy. This is the number one first place where you need to put money to become rich and successful. This is what was told to me by a multi-billionaire. He said, if you want to become a multi-billionaire, guess what you got to do? Spend more money on your education than you do on investments. That doesn't make any sense at first. but eventually it does, because the investments that you're making into yourself eventually mean that you increase your value, which means that you then attract more money without trying to. So studies show that nearly 1/3 of lottery winners go broke. In fact, within 3 to 5 years, a lottery winner is more likely to go bankrupt than the average American. So what getting rich can teach dangerous habits. Making money isn't always the issue. Keeping it is. And we're seeing that most definitely right now. So let's go on to the next bit. So about the bull and bear market, but before I go to that, I just wanted to touch on one other thing. Let me just go to it on the Facebook. Please Google the story of Earl Crawley. This is a gentleman that was working minimum wage as a parking lot attendant for around 44 years, and he has a six-figure investment portfolio. Just from putting a tiny amount every week. That's all he did. That's it. So it doesn't matter how much money you have. It depends on what you do with it. There's people that have got six figures that when they get to 50 don't have that. So this is the Facebook group. If you're not a part of it, please join. Crypto Stocks FX with Blockchain Sensei Investment and Trading Group. Then one of the things I wanted to just touch on was this. Now, there is plenty of people in this position that have thought investing and trading was like going to the casino. Because the casinos were closed and people couldn't gamble and there was not as much sports betting, people got into stocks and into crypto and then made a bit of money and then thought, oh yeah, this is kind of the same. I'm making a lot of money, and thought that those returns and the numbers they were getting were going to happen all the time. They're not. So this is the kind of thing we're seeing. I bought Doge, I bought this, da, 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 da. How do I get out? Why am I losing my money? Da, 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 da. There's a Jamaican saying, I love saying it, I say it every episode almost, those who can't hear must feel. If you don't know how to get your money out, don't put your money in. Simple. Learn and educate yourself first, and then go from there. Cool. So that's me telling you off for being a very naughty person. So let's get back to the slides. Okay, cool. So first of all, the main thing that I really want to touch on in this episode is understanding a bull and a bear market. So you'll hear this term all the time, and we're going to really focus on breaking it down today. So a bull market is when the market is going up, and it basically means that investors are constantly pumping money into the market. Now, a bear market is where the market is consistently going down and it's just a little bit flat, or it's kind of going sideways. We can call that a bear market also. Now, in terms of how and why they happen all the time, but the reason they happen is because of fear and greed and people taking profit. And when you book in sessions, we'll touch on quadruple witching and some other things. So what tends to happen is a market decline tends to be greater than 10%, but less than 20%. This is when it comes to the S&P and the NASDAQ. S&P being the top 500 companies in the US, NASDAQ being the top 100 US tech companies. Now in crypto, the bear markets tend to be 60 to 90%. So anybody in crypto, prepare yourself. Now, while the market frequently sees declines of about 10% or greater, that doesn't always mean a bear market is ahead. Now, this is exactly what's happened to crypto. The same thing. Out of, let's say, for example, between 1980 and 2018, the US market has declined about 10%, 36 times. And of those 36 times, only 5 of those times it carried on going down, and the other 31 times it went back up. Now, in other words, in recent history, about 14% of corrections were the start of a prolonged downturn, but most are just tiny blips on the radar that we don't even notice as we go along. So if you want these slides and you want this information, just let me know. So typically, corrections are rooted in psychological factors or fears. Now, let's just talk a little bit about the frequency and how often they happen and how long you can expect them to happen. Now, the reason I'm saying this all to you is because we are due a correction in the stock market, which could be used as an opportunity to buy the dip. We keep telling people about the dip. I think people think we're talking about Nando's or Pyrenees or something like that. So bull markets don't last forever. So don't get into this idea or this mentality that things go up forever. They do not. They have to pull back. Why do they have to pull back? For people to take profit. Just think, if you see an investment go up by 500%, 600%, 1,000%, 20,000%, it's now more likely, the higher up it goes, the more likely it is to pull back, because it means that people are making money. So if you're going to take profit, then the whales are going to take profit. Other people are going to take profit. Duh. So what you want to do is, statistically, you're better off to not try to time the market. Statistically, you're actually better off to just buy during the bull market and buy during the bear market if you're invested in a good, strong, fundamental asset. And this is where it comes to learning how to do your research, which we touch on a little bit here. But again, you want to invest into your education so you can figure out if you're investing into a good asset. Now, in terms of the way that works, in terms of, let's talk about the kind of the corrections first. So they average more or less one a year. So we're due a correction every single year. And then we get our mini pullbacks, and they're around 5 to 10%. And we've just gone through a bit of a pullback on the tech sector. And that's because the money rotates out of one sector and goes into another. Now, the length is normally 71 days. Now, how long is 71 days? That would be from July until the end of September. Remember this saying, February and July, clip the high. March and September, remember to enter. That's because those are the times statistically over the last 50 years, March and August is when we tend to have market dips. So if you treat those as your 2 shopping days, January sales, Christmas sales, that's the best way I would think about it. Now, in terms of the depth, the average correction involved is in declining stocks is around 15.6%. In crypto, we've been tracking it every single week, and the usual dip in the crypto altcoin market cap is so around 31%. So every 3 to 4 weeks, we've been noticing that about 30% of all cryptocurrency gets removed and then gets pumped back in, and then it shoots back up. But we're gonna look at that in a second. So what helps and what makes these dips worse is the media, volatility, fear, uncertainty, and doubt. Now, the media is absolutely having a field day at the moment because it's easier to make fear go viral. And we're going to look at some of the things that have been said over the last couple of days, last couple of weeks about Bitcoin that is just absolute doo-doo. Some of the doo-doo that is coming out is mad. I feel like, in Grand Theft Auto, when the guy goes, "Do you sharing doo-doo?" That is literally what's been happening. It's crazy what's been happening. Okay, cool. So in terms of time in the market versus just sticking and holding, here's some stats for you. So starting in 1977, and for the next 40 years, these 3 siblings invest $10,000 a year into stocks. So we've got Jane, who times it, she tries to buy the dip. We've got Jack, who just invests on the first of every month, doesn't care about the dip, doesn't care if it's up or if it's down. And then we've got John, who unfortunately gets in on the highs all the time, which definitely don't do. Now, the end results, I'm not too sure if you can quite see it, is that Jane, who is actually buying the dip, she ends up with 4.3 million. That's from investing £10,000 a year for 40 years. Now, that's on average a 9.3% every year. Now, Jack, who just puts it in every year, doesn't even really care about when he's doing it, ends up with 4.1 million. So he's only 200 grand down from Jane, and he's not bothered trying to time the dip. Hope that makes sense to you. So the reason I say to people to learn how to time the dip is what you want to do is you want to have an extra bit of cash or profits that you're making from anything else and extra buy. So your dollar cost average anyway, which is investing every single month. And then you just, if you've got bonuses or anything like that, that's when you would try and time it and give yourself that little bit of an extra push and give yourself that a little bit of extra meat. Whereas John, he only ended up with 3.5 million. So yeah, his return was 8.8%. So it does make a big difference. So when it comes to looking at that, I hope that has made sense and has cleared a few things up for people in regards to stocks. Now, in terms of Bitcoin, these are the kind of dips that we've been facing since 2012. We can see 2012, 42% dip. Then we had a 56% dip. And that was the Bitcoin savings scam that happened, where somebody was using Bitcoin as a pyramid scheme. Then we have in 2013, 32% dip. Then, and these are the prices. This is the 42% dip was when Bitcoin's high was at $7. Then when Bitcoin got to a high of $16, we had a 56% dip. Then when it got to $49, we had a 32% dip. Now, I hope you're looking at what's happening to the low. After each low, the high, that low price is higher. So $4, $7, $33, $50, $50, $378. Now, even after, check this, right? Even after an 82% drop in 2013, the price ended up being higher in the next low. So the next low was 49%, and the high was 755. Now imagine that's in 1 year. If you'd invested seven to 755, that's a 10x return in 1 year. But look at all these dips you would have had to have gone through: 42%, 56%, 32%, 35%, 82%. Then this is when the big major first crypto crash happened. And again, even though it was a big major crypto crash, we can see 49%, and then it dipped 86% and took off, dropped you down from 378 to 152 at the low. Now, again, if you'd invested here for a year and you've been investing for a while, up until 2016, you were still actually in profit. That's the crazy thing. Now, the next dip after that, it recovered and the high was 1,350, but the low was 891. And since then, it's never been lower than that. After every other dip, after the dip of 34%, 33%, 36%, 40%, 29%. And all this talk of China, guess what? China banned Bitcoin already in 2015. So, you know, this is kind of history repeating itself. Then we can see, then we had the 2017 dip, which was 83%. Look at that, 82%, 86%, 83%. And the low this time was $3,000. So if you've just been holding from the start, that dip of 83%, you're still balling out of your mind. Then the next dip was 60% of 5,000. And then this dip that everyone's crying about, where all it is that Elon said that Tesla's stopped accepting Bitcoin payments, which doesn't mean anything because they're going to make their own Bitcoin. Anyway, so in the run up to 2017 blowout, we had 6 30% corrections and 2 40% corrections, and Bitcoin doubling in 6 days at the end. This is the second 30% correction of this cycle. And if we touch 38,000, that'll be 40%. No pain, no gain. We're out of it. So we had a drop followed by a 41% drop. Everyone thought it was the end both times. Every time people are saying it's the end of Bitcoin, but it doesn't seem to be. Now, this is the big problem. The OnCoin metrics and the Coinbase earnings report are showing that what's happening is newbies are selling to the people that are holders. The people that have been in it for the longest seem to be just buying and holding and making the money. The newbies get in, get a bit scared, and then get out. Now, the reason you probably get scared is probably because you put more money in than you can actually handle. If you are worried in any shape, way, or form over your investment, that means you shouldn't be in it. That means you haven't done enough research into that investment. That's why you're worried. You should be comfortable with losing 80% of an investment. If you're comfortable losing 80% of an investment, And that means that you've got the right amount that you can handle in it. So let's say, for example, you've got 10 grand invested in something, and if it goes down to 2 grand and that makes you uncomfortable, that means you've got too much invested in that asset. It means you can't handle it. Only put in what you can handle at 80% dip on. If you can't handle that 80%, then reduce it to what that 80% would be. Reduce it from 10 to 2 and see if you feel a little bit more comfortable with that. Cool. Next one. So we've learned a lesson in history. And again, history always repeats itself. So China had already banned Bitcoin. And on top of that, the lesson from the internet is anything that China bans, invest in it. So these are a list of things that China has banned. Google, that's a pretty good investment. YouTube, owned by Google, pretty good investment. Facebook, owned by Facebook, pretty good investment. Crunchyroll, pretty good investment. Wikipedia, pretty good investment. Reddit, pretty good investment. Microsoft OneDrive and Netflix. I don't know. You tell me. Were they pretty good investments? Yes. Anyway, so told you I'd change up the slides a little bit for you. Thought I'd make them a little bit more entertaining. Now, in regards to ETH, moving on to ETH. So according to the latest long-term forecast, ETH price will hit 5 grand by the end of 2021 and then 10 grand by the middle of 2023. Ethereum will rise to 20 grand within the year of 2026. Now, this is not investment advice, but if you know anything about ETH and you heard us say anything about what's going to be happening with ETH and what we discussed last week with Coinbase, so let's just give you context of what's about to happen with Ethereum. So Ethereum, and Ninja's dad is on here and he can co-sign this, is a Ethereum smart chain developer, and Ethereum is planning to go from proof of work to proof of stake. What does that mean? That means at the moment, everything is done through the algorithms confirming the mining, and node systems are done through confirming that you've worked out a calculation. That's it. That's how the blockchain works there. Now, what it's going to change to is if you are holding a certain amount, that's how you get to become one of the computers that becomes part of the mining system. Now, all you have to do to hold that is 32 ETH. Now, what are the chances that last week we discussed that Coinbase have announced that they have over 8,000 institutions investing in cryptocurrency, not including Bitcoin, through them alone? 8,000 institutions, including pension funds, insurance companies, hedge funds. Now, they bought something called Bison Trail. And what does Bison Trail do? Bison Trail allows, and their whole initiative is to help banks, hedge funds, pension funds, and insurance companies to become nodes on the cloud by sharing and pooling their ETH and other cryptocurrencies together. If you got that, you got that. If you didn't get that, you didn't get that. Now, in terms of the growth on Ethereum at the moment, if we just look at Q1 2020, these numbers, there was transaction volume in Q1 2020 was 33 billion. It's now 713 billion in volume. Transaction fees were 8 billion, and now it's 1.6 billion. That is a 20,000% increase in transaction fees. That is a 2,000% increase in transaction volume. Now, the most important bit that people probably aren't going to clock here is actually the DEX volume. Now, DEX is apps. Now, that is gone from 2.3 billion to 177 billion. That's a 7,596% increase. Now, why is that important? That is important because that shows the intrinsic value. It shows the intrinsic value of Ethereum has increased by 7,596%. What's intrinsic value? It's value that cannot be destroyed, that is internal to an asset. So that would be like if you had a house and you made the toilet out of gold and bought some Van Gogh paintings and sold that with the house, the intrinsic value has gone up. And Ethereum's intrinsic value goes up because every time someone creates a website, an app, then yeah. Next is the NFT art sales. Obviously, also all these NFTs that are now on the Ethereum network, what do? Add to the Ethereum intrinsic value, which has gone from 0.7, so 700 million, all the way to 396 billion. So that's a 56,163% increase. Do the math. Okay, cool. So next update is Polkadot. I've been going on and on and on and on and on and on and saying, yo, you need to buy up that Polkadot. Gavin Wood, May 17th, announced that the Polkadot next stage is now ready. The parachain functionality and the auctions and crowd loans behind them are ready to go. So what this is going to allow for the next evolution of Polkadot. So Polkadot's whole thing is that they can actually combine other blockchain networks together in their network. So their network can allow you to work with the Ethereum chain and the Binance chain and the Bitcoin chain all at the same time. And their whole thing is that they are going purposefully to businesses to help them to move over to the blockchain. So watch out for them. Cardano, very, very funny. So if we know what the ERC20s are, which is basically tokens that are on the Ethereum network, smart contracts, and we've got the Binance smart chain as well. The Cardano smart chain is almost complete. So according to Francisco Landino, Project Money Input Output Hong Kong, or IOHK, which is Charles Hoskinson's company for Cardano, the platform's ERC20 migration tool is nearing testnet deployment, which means that they are now officially testing moving things from the Ethereum network over to the Cardano network as a bridge. So what's that going to do to the price? Probably skyrocket it. And this is why the price prediction on Cardano at the moment, which is currently £1.51 because of the dip, is predicted to go to $40. That is a 2,549% increase. So whale watch. Yeah, I thought I'd add these in for the people. Just a bit of updates on what some of these whales are doing. So one of the things that we got posted in the WhatsApp group the other day was that Goldman Sachs executive director has been talking about how XRP is one of the things that they are looking at using for their main infrastructure. If you don't know about XRP, it's mainly, the whole purpose of it is to help the transfer of money quicker and faster. We've also got the Valor, a Swiss digital investment firm, is launching exchange traded funds, so an ETF for Cardano and Polkadot. Guys, if that isn't a cosign, like Swiss banks are creating Cardano and Polkadot ETFs. Why would they do that if they don't see that there's a big boom about to happen on it? Hello. Hopefully these light bulbs are going off. Well, hello there. I don't know if you heard about this one, but PlayStation have actually released a patent about them allowing for Bitcoin in-game betting on esports events and live games. So you would be able to bet Bitcoin if you think you're going to beat someone at FIFA or Tekken. Bring it on. I will kick your ass at Tekken. And soon to be Dragon Ball FighterZ. That's my game. So what's interesting about this is this patent was actually filed in 2019. Say no more. Now, other whale action is Fox are creating an NFT studio to promote Rick and Morty. So they're going to be creating Rick and Morty NFTs. I say no more. If we know anything about Fox, imagine they start dropping Rick and Morty NFTs the same day an episode comes out. Oh my days, that is going to go off. So I'm going to open this up here and let's test people's knowledge. Does anybody know, answer in the chat or unmute your mic, anybody know any other famous brands owned by Fox? I'll hum the theme tune. There is no way no one got that. No way. The Simpsons. There we go. Now let's just take a guess. Will Simpsons NFTs do well? I think they will. Futurama ones. Will Family Guy, American Dad ones do well? Will Glee ones do well? Yeah, of course they will. What else have Fox got? American Horror Story, Nip Tuck. They've got loads. So I think, yeah, this is gonna go off from them. So one of the things I wanted to touch on again, as we do every week, is Fake News Weekly. So this is the kind of FUD that gets put on the markets. This is the kind of nonsense that we see out there on Twitter and just floating about. Now, this is the stuff that was tweeted and was circulating in WhatsApp groups and so on and so forth. The CEO of Binance, Brian Armstrong, the CoinDesk, Elon Musk saying, so look at this Elon Musk tweet. I guess that means crypto is officially dead. Not to worry though, it'll be alive and well on Mars. We'll do our own network and run it independent of current legislation. Binance said, as a result of recent regulatory measures imposed by the US government, effective immediately, Binance has permanently halted all trading activity across all platforms in global regions. I'll be working to cease all operations over the next 3 months. Withdrawals remain open for the time being. Michael Saylor, I was so convinced I was making the right decision investing in Bitcoin. Unfortunately, life doesn't always pan out the way you want it to. It's truly sad how blind our government to the technological potential of the space has such decided to spell its demise rather than embrace it. I've seen dumped all holdings in Bitcoin. That's the end of that. Now, this was all fake, because when you go to their Twitter pages, this is what they actually said. None of what these things in WhatsApp groups were saying. So, guys, this is why you need to go and do your own research. As simple as, if you see a tweet on something, even anything we share, go and do your own research and see if that was actually on that Twitter page. And again, also be wary of influencers. So we probably, you don't know if you know about Dave Portnoy. He's been making absolute racks off being a so-called crypto leader, not really educating people on how to do their research, just telling them, get in this. And what he did is he put everyone follow me for Safe Moon Army, and then Ben Baller called him out and said that Safe Moon actually approached him as well. So he kind of got outed there. And the reason he's promoting it is because he got given a shit ton of coins. And we've been given shit ton, well, I haven't, but Ninja has been given coins to promote things before. And he didn't promote them because he thought they were crap. He just took the free coins. So this is something you got to be aware of. Sometimes we've got 100% honesty and integrity, but a lot of people out there don't. So you got to be wary of these influencers. So this is kind of funny. Hopefully you get it. These scam coins are getting crazy. Someone just showed me 27 trillion in circulation, unlimited supply cap, only one node, 25% of supply minted in the last 6 months, and 1% of the holders own 30%. That's actually the US dollar. I found that kind of funny. I don't know if anyone else found that funny. But yeah, so this is what's happening with the current crypto total market cap. So this is the market cap, the value of all crypto excluding Bitcoin. Now, when we look at this chart pattern and we look at the Dow Jones, how similar are these chart patterns? I'm not going to say that they're identical, but they're pretty near damn identical, if you ask me. So if we look at what happened when the Dow hit this zone here, oh, look what happened. It flew up like crazy. So what could potentially happen next? It could fly up like crazy. Now, in terms of the total altcoin market cap dips, in the 2008 crash, like we said, the entire crypto market space dipped by 92%, guys. That meant that it got up to being valued at 465 billion, and 427 billion of it was wiped out between November and November in 1 year. That's what happened. Now, I want you to keep note of these numbers. So remember, 427 billion wiped out in 1 year. Then next was a 93 billion drop, where it dropped 65%. And then in 2020, with the COVID situation, we dropped 75 billion. And now the reason I'm saying this is because now we're going to go and look in the charts. Now we're going to go and look and have a look-see, have a nose, have a browse at how bad or what we're expecting to happen next. So let's go to crypto market cap. So the markets. And again, guys, don't sleep on gold. I think I need to touch on this. Don't sleep on gold. This is what gold's been doing. Look at this beautiful double bottom. 12% on gold in a month. Don't sleep on it, guys. That's where they're putting some of their profits. Okay, cool. So this is what just happened. Now, we do this every week. We're going to do it again. So the last drop was 217 billion in total. But if you just go to the close, 143 billion in 1 week was removed. So does that sound anything like the numbers that we had before? If we go from the top of the wick here onto this one, in this week, we had 346 billion removed in 1 week. But then how much got added in the following week? 234 billion. And in 2 weeks, 434 billion was added to the crypto space in just the first week of May. So let's now calculate how much got taken out in this last week. That worked out to be 529 billion, and it was only a 41% pullback. Now, based on the numbers that I was talking about before, is that bad? Really? Is it? No, it's really not. And again, some of you may not be educated on how to do your technical analysis, but I'm going to say that kind of looks like a support there, apart from this cheeky wick, but it kind of looks like a level where it's come to, it bounced, it come to, it bounced, it came down, it bounced. So where are we expecting it to go from here? Like we've been expecting it to go to the whole time, to the 2.8 trillion mark. We're expecting the entire cryptocurrency space to be valued at 2.8 trillion in the next 6 weeks. So that would need an additional 1.8 trillion to be added to the cryptocurrency space in the next 6 weeks. So that would need around 400 billion to be added per week. Is that possible if they previously added 471 in 2 weeks? I think so, possibly. As soon as crypto gets to around here, the 2 trillion mark or the 1.5 trillion mark, everyone's going to be back all over again. But then from there, this is when we're going to expect a 80% drop. So be prepared that crypto will basically come down to the levels that it's at now or just a little bit lower. So I'm expecting around there. This is where I'm expecting. Let's draw that in. Now, again, it's not about time in the market. It's just about being comfortable with that price drop. It's about knowing, oh, okay, cool, I'm expecting it to go there and being comfortable with it. The moving average is suggesting that it's going to go to here, 163. But I don't think it's going to go that low because there's too many whales involved. Again, there is 8,000 whales involved in this space right now. So it's very unlikely. So let's have a look at what's happening with Polkadot. That might be moving a bit ready now. Let's have a look, see. So we can see Polkadot was moving sideways beautifully. This is called an oscillation. Look at this. Again, beautiful support line. 1 touch, 2 touch, 3 touch. And this is on the weekly. This isn't even on the daily. If we do this on the daily, it's even more clear. Oh. Just chilling in this range. And when things chill in the range, what do they normally do? Well, let's go back and look at the last couple of things that were to chill in the range. So the last one was Bitcoin, which chilled in this range here. And our analysis that we were saying that it was going to dip and get to here. Oh, look at that. It's done exactly what we thought it was going to do. Exactly to the trend line. What are the chances? Then we'll go, the other one that pumped after that was Ethereum. So it didn't have as much of a channel, but we can see it slightly, look how sideways this is here. More or less before it had a big run. Then we had Binance. And we can see a really clear channel here. This whole area there, that box. I'll just draw it in so you can see it a bit more clear. This box here. And then boom. So this is exactly what we're expecting to happen now with Polkadot and then Cardano. Again, Cardano, really nice box there. And again, look at the price that Cardano came down to in this big crypto dip. It didn't even get out of the box. It didn't even get below here. It's crazy how accurate this stuff is when you start doing tech analysis. Okay, cool. So let's go back to, in terms of some predictions, they're on my Twitter. I'm going to put them out there. It's recorded. I like having them recorded now. I've retweeted this a very, very long time ago. I couldn't find it. And that was for ARK Invest to buy Coinbase. They've done that one now. Our next prediction is that ARK Invest are going to buy some of the Grayscale ETH. Grayscale is a company on the stock market that are buying Bitcoin and Ethereum and allowing it to be on the stock market, basically. And then also ARK Invest to buy some Airbnb. And then I'm also predicting that Coinbase, Grayscale, and Airbnb will be added to the S&P 500 by 2023. Some analysis that me and Seb did. Big shout out to Seb. We're predicting for Tesla to go as low as 400, maybe even as low as 377 in August after an explosive move in June and July. And then it's going to go to roughly, we've calculated around 1,400 after Bitcoin, after Tesla announces that they're going to be doing Bitcoin mining. And when Bitcoin goes to 76K and maybe 125K by December 2021. Oh no, why is it doing that? Is that the only prediction we've got? I think it is. Bitcoin 76K by the 18th and a 2027 crash. Yeah, that's all we've predicted so far. Okay, cool. So let's go back to the slides. Oh,